All right, what's up, guys? Welcome back. Happy Monday, the 8th of September. Great weekend of football there. Few really good games for sure. All right, what's up, Mirza? What's up there, Miss Lorna? Yeah, the 8 o'clock game or the night game. Granted, I fell asleep about halfway through the first quarter, but I woke up to some pretty good highlights on that one. But all right, guys, happy Monday. Welcome back to the action. And yeah, for you guys and gals who are in my room, got a fresh sheet going here where we'll track our next 100 or so trades. I do want to go back one more time through it tonight. Make sure nothing is missing, but if we have, let's see, we are, right, the gray would be the open trade. So we are long Tesla, long some Amazon, long the JP Morgan, and we are now short the crude oil. So again, I'm going to go through that one more time tonight, make sure, going back to about early August, make sure nothing's missing. And again, the whole point here of tracking your trades, one, it can be a confidence builder. Two is just more so the feedback from your system. What's working, what's not working, where is it working? Is it am I getting paid mostly on the 15-minute, 30-minute hourly squeezes? Am I losing money mainly on the daily, weekly squeezes? So confidence, feedback, proof of concept, and good chance for me to put my money where my mouth is. But all right, for a few of these open trades, we're long Amazon, Tesla, JP Morgan, and short the crude oil. So quick peek at a few of those for the Tesla trade. Look, I think Tesla wants to break out. It's just, in the short term here, not too much of a good market behind it. Granted, I don't think it has a bad market behind it. But if we get, another 2, 3, 4 weeks of this kind of action from the QQQ, they pull it back, they pop it, pull it back and pop it. That compared to the action back here, June, July. Back there, it's easier. Jump in, you buy the hourly squeezes, buy the daily squeezes, 15-minute. You pretty much buy everything. And then the choppy chop, it can make that breakout pattern a little trickier. But yeah, for Tesla, we have the October out the money called debit spreads. And again, you have a big old quadruple squeeze here. The elusive quadruple squeeze. Weekly time frame, the 3-day time frame, the 2-day time frame, and the daily time frame. Which can make for that big domino effect. They break out the daily squeeze. That can take you maybe, call it 370. If they can get her up into 370, they maybe go and fire the 3-day squeeze. That bad boy can maybe get you closer to 400. And hey, if you're up there at 400, you might as well go ahead and fire the weekly. You're already in town, right? They fire the weekly squeeze, then your target's closer to 420, 430. So yeah, I'm liking that one in a little gap here into the 355-ish. Now here's the key in the short term. To get anything going, they have to get it and keep it above the 350. And not for, 15, 30, 45 minutes. Get it above 350, keep it above 350. Ideally, never see 350 again. And then we have the Amazon October called debit. Again, another name based on the squeeze action, the structure. It does look like it wants to break out. We have the green arrow squeeze here on the daily. We have the green arrow squeeze here on the 2-day time frame. Target around 245-ish, 250. And then the big dog here would be the monthly, which does make it a little like Google from back in early June. 15 points, good structure, good trend, brand new monthly squeeze. Then again, think in terms of that domino effect of a multi-squeeze setup. They break out the daily squeeze, gives you a decent push. That push wakes up your 2-day squeeze, a bigger push. You break out the 3-day squeeze. They ever get to a point where they can go and trigger the weekly or the monthly rather, 275, 280-ish. And then the JP Morgan, so pretty ugly reversal in the financials back on Friday. I'll show you guys here on a 30-minute. The gapping and the crapping. If you look at the 3-day and the 2-day squeeze, they do continue to look pretty bullish. The XLF gets down here breaking under, call it 52. At that point, you're going to lose your buy trigger. But I think that shapes up pretty good for now. And then the 2-day squeeze, again, down here at 52 and change. It won't mean the squeeze has to go and break short. But at that point, I'd probably take off the long and move on to a greener pasture. So for JP Morgan, right, caught up in the crossfire. All right, if we check the 3-day squeeze, could change here at the open till it changes. The indicator would say we jump in and try to buy more. That'll be more of an XLF thing. And then for maybe the 4-hour squeeze here, in a little shorter term, just neutral. 4 points at a 15, neutral structure, neutral trend. So yeah, in terms of the 3 open longs, would have to say for now, JP Morgan's not quite my favorite. But in terms of a good line in the sand here, anything much below 290, again, doesn't guarantee the 3-day squeeze has to go and break short. But the idea of you jump in, you buy it, and you're planning for a move into 315, 320, they get the break in 290, it gets a little bit less likely. 3 open longs and a short here in the crude oil futures, which we had a little day trade back on Friday short. We're shorting this one off of the daily squeeze here. Exits up there about 64-ish, and the target will be closer to, we'll call it $60. But all right, few open trades there, and then a few things here from the rankings. Now, I'll preface all this by saying two or three things that could become an issue. One being your overall sector leadership. I tend to think we get our strongest, most sustainable rallies when you look over here at the sector rankings, and it's the XLK in first place, the SMH, Big 10 basket. A lot of your more heavily weighted market-leading names: Google's, Amazon's, Nvidia, Broadcom, Tesla's, Microsoft's, Meta's, Apple's. Right now, we have communications. And granted, that's a lot of Google right now. In second place, you have the XLY. I think that'd be a lot of Tesla. Tesla, some Amazon. Right, then we have biotech, materials, real estate, silver, gold, and healthcare. Here's the SMH. Doesn't look bad. The XLK doesn't look bad. But again, if leadership is biotech, materials, and real estate, to me, it doesn't point towards incredibly strong, sustainable rally coming. But you take the 40,000-foot view here, things do look pretty bullish. Market bullish. You got a strong IWM. S&P's got a good score. QQQ a good score. But again, I don't love the current leadership. In terms of, hey, would I buy the QQQ, the S&Ps, and go for a 4-week vacation, then come back and check? If I could leave for vacation with the SMH in first place, XLK, Google, Amazon, Meta, Microsoft, yeah, maybe. So yeah, overall pretty bullish here. I don't love the rankings. The other issue being on the QQQ, right? Big 3 meaning trend, structure, momentum. And we should really call it the big 4: trend, structure, momentum, and a squeeze. Good example of that for the bulls would have been the Qs back in June, July. All right, daily squeeze sets up. You have your buy trigger, really good structure, really good trend, and you had good momentum. That comes from the MACD bars down here. You got the big 4. Whoops. You've got the big 4, the squeeze, trend, structure, momentum, breakout, squeeze fires, and I think a lot of us would call that the easy action. Breakout patterns work. You buy the dip, that works. You buy a squeeze, that works. Then we lose momentum. We keep our good trend. We keep our good structure. things get a little bit more difficult, right? They gap down, big rally, they pull it back, they pop, gap down, pop it back up. You go from, easier, more clear direction to what can really be a lot of, back and forth glorified chop. Oh my God, here we go. Everybody get short. And then, okay, maybe not. Everybody jump in, play for the breakout. Well, maybe not. Get short. They're up, they're down, they're left, they're right. So in terms of, hey, can I buy more Amazon, more Tesla, more Apple, Nvidia, Google? With any kind of confidence, we're back in June, July, or back in the Q4 of last year. Here's your Q4 of last year backdrop. QQQ had the perfect weekly squeeze. If we're gonna get that kind of moment in time, we have to get that momentum shift. Take that daily MACD, pull it back above zero. You'll then have the big four. Then I think a pretty good probability they try to go for a brand new all-time high. If they can't get momentum, really at that point, the best case for the Bulls, it's more of the same. They don't really crush it. They don't really go and kill it. They don't break structure. They don't break support. Again, a lot of ugly back and forth, up and down. Worst case scenario, they keep on playing that game for a little bit too long. All right, we have no momentum, but we're going to hold support, hold support, hold support. At some point, the squeeze has to fire. If they can't get momentum for the Bulls, it could go and break short. And, if we get there, we get there. If that does happen, I think there's your pull back to your weekly 21. Alrighty, so a little context there. And the third thing would be NVIDIA. You get that kind of action back in June, July from NVIDIA. It won't by itself take the entire market higher. But in a lot of ways, it can make it tough for the market to really go lower. Strong NVIDIA can equate to a strong SMH, strong AMD, strong Broadcom, strong QQQ. Google gets a little love, Apple, Amazon, all the above. So the current picture here would be a daily squeeze breaking short. In what's really more of a neutral chart. If you were to say, hey, show me a really good short, kind of thing I could short 100 times in a row and overall make good money. In my book, that would be the crude oil futures. I had the short work back on Friday. The current short might not work. But yeah, if I can short that 100 times in a row, daily squeeze, negative 15, broken structure, broken trend, broken momentum, that kind of thing should work out in my favor. If I try to get heavily short NVIDIA, who impressively enough actually still has a positive score, yeah, it could work, but doing that 50, 100 times in a row, I don't think you have as much edge. Point being, I'm not looking at NVIDIA for a major short, but I am looking at it as more of a short-term context. They break it down to a $1.60, $1.50. Not going to be a great thing for QQQ, SMH, Broadcom, all involved. If they can make this the biggest bear trap ever, trap the shorts back above 175-ish. Good thing for D market. So again, rankings are rankings, and never want to fight them. Overall, good-looking market. Things are pretty bullish. Strong IWM, strong indexes, XLC, XLY, biotech, materials, real estate, silver, gold, healthcare. It's just in terms of, hey, could I get massively long and call for a good 3-4 week rally? Most times I want different leadership. Every time I'd want good QQQ momentum. It would never want to have one of my biggest dogs, NVIDIA, trying to, well, we're not even too sure what NVIDIA is trying to do. To me, that means, little 50-50 on my swing trades. Try to give them decent time, maybe take more of a scaling approach. And then while I'm waiting for NVIDIA to figure things out, QQQ momentum, the other focus being day trades. Future setups, S&P 0 day till expiration, all that fun stuff. But all right, guys, that is that. We are long Amazon, long some Tesla, long some JP Morgan. That one maybe being on the chopping block. Short the crude oil futures, and then what would I like to buy? Would buy Google on a pullback. I would indeed. And then one name trying to climb the board here, climbing the ladder, would be Netflix. I don't have the trigger yet. Being the kind of guy that I am, I would wait for it. But pretty interesting weekly squeeze shaping up here. This will be week 2. 2 weeks of compression. But yeah, I mean, if they could turn that into the Netflix weekly squeeze from October, we'll be there for it. Like in that one, let's go look at maybe AMD. You know what? One more point of view for NVIDIA. And I think a point of view at some point we'll have to have on the entire market. NVIDIA rallied a good 110% off the bottom without ever pulling back and back testing the weekly 21 EMA. So in the terms of very normal, ebb and flow, trend structure, maybe not right now, but at some point you do got to pull back to that weekly mean. And in a good market, that can make for, moment in time like back here. Big old kick higher, big pullback. They hold structure, 15 points. They keep the buy trigger. You buy the dip. If you do get that back into, $1.60 and change, don't forget that bigger picture point of view. Your 15-minute chart's probably going to be pretty ugly. You'll have a rough-looking 30-minute, rough-looking hourly. From your weekly charts point of view, you maybe do jump in and try to buy that dip. If they pull the QQQ back into 550, same conversation. If they pull Broadcom back into, 270, same conversation. But all right, y'all. Any questions you got? Anything you want to look at? Get it in the chat. And then a quick peek here at the futures. Yeah, the NQ is really tricky here. Everything for a breakout but momentum. And I found that can be the toughest combo to read. Where if they had good momentum and in crappy trend, crappy structure, they can take that good momentum, then they can work on getting better structure, kind of stabilize it. They can work on getting better trend. When it's the opposite, you have good structure, you have good trend, you have no momentum, they can't really go and take advantage of it like they should. Hey, what's up, Sanders? Good morning. UNH. Yeah, healthcare. Where would healthcare land? Yeah, healthcare getting much better. All right, the U, the N, and the H. Is it going to be the strongest name on the board? No. But again, compared to 4, 5, 8 weeks ago, much better. Let's go take a look at the old UNH. Yeah, I would call it a pretty good bottoming formation. They went from a negative score to, what's that? There we go. They went from a negative score back here to now a positive 5. Now, for a really good chart, they got to go and get another 10 points, but it's better. They got the positive momentum shift. They got the 21 EMA back above the 50. It's not your perfect structure, perfect trend, crazy bullish, locked and loaded kind of setup. But I do think you take a step back in more of a bird's eye view of it. Again, pretty good bottoming formation. Now the key would be, I think you mark up your daily 21 EMA. That very much becomes your short-term over-under. but it'll be a while until you have a weekly buy trigger, a daily buy trigger. Your context now comes from your 1 hour, 30-minute, 15-minute, 5-minute. Right. So we're gonna mark up 298, 300. I would then drill down to maybe an hourly time frame. There's your trade. You're not going to catch that kind of alignment for what might be a long time on a monthly chart, a weekly chart, a 2-day time frame, a daily time frame. But as long as your daily time frame is trying to show signs of bottoming, you can catch that on a 5-minute, a 15, the 30, the hourly. Nice hourly squeeze. Got the entry arrow, perfect structure, 15 points. All right, now I can jump in, call for my shot, and manage my risk. Where the daily chart is better, but in terms of the immediate edge, I only have 5 things here to work with. Where, hey, I can drill down to the 1 hour time frame. Now I've got the full 15. So yeah, from that point of view, is more of a, traded from the ground up with a bottoming pattern behind it. I do like it. Hey, Donald, good morning. Happy Monday. VZ. Looking like a healthy gap down to 42 and change. Donald, any idea what the news is there? I'm making the assumption there's news. Yeah, 42. That'll put you down a good. My calculations would say, yeah, down a good 4 and change. Now maybe they try to hold it here at the daily 200. Let's go look at the weekly. Yeah, if they do gap it down to 42.50 and change, there's a couple different levels of support. The weekly 50, weekly 200, weekly 21, daily 200. They maybe try to fight and hold it there, but wouldn't be the first guy trying to buy it. If they are going to find quick support, make them prove it, make them hold it. Then you work the cash back in. Good morning, Debbie. Yeah, Lorna, the Jets game, that was a close one. The old man got it done, I guess. It's so crazy calling somebody in their early 40s old man, but it is a young man's game, I suppose. All right, folks on YouTube, good morning. Ron, what's up, Ron? Ron G in the building. APP and Hood. Yeah, they got the addition to they got the addition to the S&Ps. New kid on the block. And APP gapping into 540-ish, we'll call it, and then the Hood. Welcome to the Hood, Hood. Hood popping a bit into 110 and change. It could be a lot of back and forth there. People may be taking profits, people looking to maybe initiate a position. Could also be a little force buying. But yeah, I think you just kind of take these two day by day. Buy the rumor, sell the news. We'll find out. For Hood here, if they could ever get that momentum shift, the fact they've had such a big momentum break, and they don't break it short so far. If they could ever shift it back to the buy side, could be a little snapper for you. Good morning, Larry. Larry checking out GLW. Nice breakout here on the daily squeeze. I think it looks awesome from the indicator point of view. Really couldn't get any better. 15 points. All the pretty colors. In terms of a really good risk reward entry, at least off the daily time frame, that ship is kind of sailed. Where my goal would be find that daily squeeze, buy it as close to that 21 EMA as possible, and then cash out on a push towards that green line. The third ATR Keltner channel extension. Now, price getting there doesn't mean it has to pull back, but I would make it more of a continuation idea up here. Meaning, okay, if I didn't catch the entry back here, I can play for another push off of a 15-minute squeeze, a 5-minute, a 30-minute. Jump in, find my edge, and keep my risk in check. Where I maybe don't want to jump in and take a massive swing position, and then I'm going through a pullback back into 65 and change. But yeah, overall, pretty good looking chart there. Yeah, what's up, Gabe? Yeah. I mean, like, where was it? I joined Simpler back in late 2020. And I think back then I was only doing credit spreads. Yeah. I was a local put credit spread guy. Now I'm doing futures and day trading, becoming a well-rounded individual. All while being a one-trick pony. Just taking that squeeze, making it a little more universal. Big Danny, what's up, Big Danny? Good morning, Mr. Ross. All right, guys, I think we will call it a morning session there. Folks over in my room, over in the main room, I'll catch you guys in 2 or 3 minutes here for the open. And then, yeah, guys, I don't think anything that would change today. But again, one of the bigger things I'm seeing that not a problem until it's a problem would be your daily squeeze for both the QQQ futures and the cash QQQ. Structure is really good. Trend is really good. Momentum remains lacking since 4 or 5 weeks ago. We get that. I think we'll get a breakout. We don't get that. More of the same. They pop it, they drop it, or they do try to break it short. And you maybe finally get the weekly reversion to the mean. But thank y'all again. Much appreciated. And then, yeah, same time, same channel on Wednesday morning. Adios, y'all.